Welcome to the Gamma Brief. It is Monday, August 3rd, 6:45 a.m. Eastern. If you're new here, the Gamma Brief is an experiment. The brief is built using a layered generative AI pipeline to capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. This brief is built on a single data set, the SPX 0DTE options chain. All the gamma levels, dealer positioning data, put and call walls, and the GEX flip point are calculated from that chain only. A friendly reminder, Gamma Brief is market intelligence, not financial advice. If you like what you hear, smash that like button and sub. Every subscriber to the channel helps. All right, let's get started. ES futures are trading at 7,558. On Friday, we issued a caution signal for high volatility based on the structural setup, but the session stayed range bound and the 7,400 put wall held perfectly. If this morning's overnight gap holds, dealer gamma resistance is already broken. If it fades, the expected move reprices violently lower. The standard regime settled into positive gamma, carrying a net GEX magnitude of positive $6.1 billion. In this environment, dealers are net long options, meaning they buy into dips and sell into rallies, structurally dampening volatility. The VIX sits at 15.97, aligning with this compression framework. However, the GEX flip sits at 7,505, meaning the cash close left us operating near the gamma flip. The regime read carries elevated uncertainty due to the prior session's data conditions. Looking at the geometry, ES sits 134 above put wall, negative 29 from call wall. Gap fade reprices floor to 65. The expected move band is defined strictly from the prior close of 7,490, giving us a lower bound of 7,414 and an upper bound of 7,565. Crucially, ES futures have already cleared the reclaimed levels of 7,502 and 7,514 and have breached the 7,530 call wall. Overnight, earnings-led tech strength provided a risk-on baseline, even as Asian markets faced severe pressure, highlighted by a sharp drop in the KOSPI following Chinese factory weakness. Cross-asset reads show ES flat, VIX down 0.13%, and the 10-year yield up 7 basis points. Sector breadth is rotational, with communication services adding 1.1% and energy up 0.9%, while technology lags dropping 2% alongside 1.8% decline in real estate. The primary risk today hits at 10 a.m. Eastern with the ISM Manufacturing sweep. This is an asymmetric event. A solid print keeps us elevated near the expected move upper bound, while a sharp miss could spark a broader macro sell-off, pushing price back into the gap and toward the 7,505 flip. Zooming out, this week carries a risk score of 5 out of 5. Today's ISM print is just the opening move. JOLTS job openings lands Tuesday, ADP and ISM services stack back-to-back Wednesday afternoon, and the whole week builds towards Friday's non-farm payrolls at 8:30 a.m. Eastern, the single largest event on the calendar. Or rather, the single largest risk event on the calendar. Every print between now and Friday is a probability update on that number. The current environment is consistent with defined risk income structures targeting range extremes. Full size here is leaning on a wall that has not decided which way it falls. A sustained break back below 7,505 invalidates the mean reverting thesis and flips the regime to momentum. Our range-bound thesis holds above 7,505 flip, so focus shifts on resistance at the 7,565 expected move upper bound. The positive gamma regime faces an immediate test as ES futures sits above the call wall. If the 10 a.m. data pushes us back into the gap, dealer support resets significantly lower. Friday's read didn't hold. Respect the levels, not the narrative. Levels set, buys to find. Good luck out there. Standard disclaimer remains. The GEX log, Gamma Brief, and GEX log are market intelligence, not financial advice. Options are high risk, manage your size, and trade your own plan.